This is my reaction to a thought on the accounting difficulties and sort of recognizing if management have been playing about with the accounting to sort of misinform investors. So what this could be is, for example, internalizing capital could make the business. It's done quite often in, for example, oil well and oil mine and sort of any mining type businesses. It's quite common where they take the interest from their loans, and rather than taking that off the net income as an expense in the income statement, what will happen is that interest cost will actually go and be added onto the asset value on the balance sheet. Now, as to why this actually works, I don't fully agree with it, to be honest, but it is a thing that is possible and is allowed. The rationale behind it was essentially that businesses would be able to um, add it onto the value of the mine that they're developing, because the mine they're developing isn't just for this 1 year, it's for the long term and has a long runway behind it. Therefore would add in Therefore, if you had 10 million in interest costs that year to finance it, you would then add that onto the value of the asset. It would be nowhere to be seen on the income statement. But I've seen many instances where the business is paying 60 million in interest cost and they're showing a net income of 40 million, but actually the business is losing 20 million net income every year. And as a result, I've seen it quite often where the value of what they're developing can quite often be overvalued as a result as well, because as a result 20 million is being added onto the value of the mine every year, when realistically it's not reflecting what has actually occurred. So I think that's a mistake to watch out for. But these type of mistakes, or perhaps they change the depreciation rate of an asset, they might have it a straight line depreciation, meaning that they just depreciate it by 20% every year for 5 years, or they might have it where they depreciate by a certain they might increase the lifespan of the asset or decrease the lifespan of the asset to show it's less profitable or more profitable. But I think it's very important for you to realise that management can play, or the accountants can play financial tricks. And Warren Buffett has often mentioned that, would you actually want to invest in a business that is like that? Would you want to invest in management which behave in that way? And I think that's a really valid point to take into account.